When we're talking about the fixed assets, there's a few best practices with this. Um, Number one is making sure you're classifying your fixed assets correctly. In other words, if you purchase um, what are those robots that count the pills? What are they called? Pill counter?
Icon pill counters.
Icon pill counter. If you purchase one of those, they're about 10,000 bucks, give or take. That is a fixed asset, for example. That is a depreciable fixed asset. It goes on your balance sheet as a capital piece of equipment. It is not just written off and expensed on the P&L in that manner. So it needs to go on as a fixed asset, and you depreciate or write that off over a period of time. Now that's where your CPA would get involved there, Kathy. Your CPA would determine that write-off period, but there are sections of the tax law, and we can probably get into this on another episode, where you can aggressively write that off. So whereas maybe a robot like that or a script pill counter would be a 5-year write-off under the IRS rules, there could be provisions in the law that allow you to take that write-off in year one.
Mm-hmm.
So planning is a key part of fixed assets. Fixed assets should definitely be part of your planning, tax planning, and strategy in that regard. Kathy, the other thing is at the end of the year, reviewing that fixed asset schedule, right?
That's right, because you want to sit down with your accountant, pull that depreciation schedule from last year, review it from top to bottom. Don't just go to the bottom and see what you didn't add. Start at the top and see what you've got. We saw one this past week that had assets from 1982.
Yeah.
So they had computers from 1982. They had printers and phone systems. As a matter of fact, they had 4 phone systems. They had not cleaned up the depreciation schedule recently. So that's step one, is to look and see what you've got and then identify those items in the store and then clean up the stuff that's old that you've probably replaced over time. You may have disposed of it and no longer using it at all. You may have sold it or, it just disappeared.
All right.
Um, but you definitely need to make that an annual practice of going through that schedule and not only identifying what you got rid of, but identifying the things that you bought in the current year that you need to add and providing your accountant with that documentation and identifying the purpose of that piece of equipment because some of the CPAs don't know pharmacy and it makes it a little bit hard for them to understand what a parada does or specific pharmacy robots, and those can have specific depreciable lives.
For sure. And I guess the last thing would be here of the 3 points, Kathy, would be
Getting an estimate of your accumulated depreciation for the current
there
year
you go.
and booking that on a
Yep.
monthly basis. Your accountant can adjust it to the actual amount at the end of the year, but making sure you're at least plugging something in monthly for that expense, again, to add additional integrity to your balance sheet, but to make your profit and loss statement more accurate on a monthly and year to date basis.